Hi everyone. Right, so the last time where we left off, it was on the screen of the 20th of May 2021 at 4:44 p.m. GMT plus 2 on the Nasdaq futures. This platform just calls it US Tech 100 on the 4-hour chart. And remember, I've got a buy open at 13,032. We waited for the FOMC futures to be um, to be released before I bought because I said that from my experience I know that Nasdaq futures goes down on FOMC minute release day, and I have one buy open on 13,032.80 and another buy open at 12,974.60, and I said when it started going up here on the 20th, I said, here is the big test on the 4-hour chart now. And what I mean by that is if you have a look, it's now reached the price, which is quite familiar, going right back to the 11th of May. So it's been trying to go up, all along. Since the 11th of May, it's been trying to go above this price line. And now on the 20th of May, we've reached that price line again. So is it going to now continue going up, or is it going to go back down again like it did in the month of May? That's the big test. So that's where we left off last time. Now I've got another day's worth of trading, and let's have a look at what happened. Okay. Before we look at that, I just want to give you a bit of info. I said yeah, it's Friday. It's a tricky day to trade. Some investors worry about what's going to happen over the weekend with the virus news, especially now with the appearance of the most aggressive variant in India, the most aggressive variant so far. Also with the Iran nuclear deal negotiations, oil rig and other hackers, as happened in the week. Saturday and Sunday is closed for any quick decisions based on bad or good news. So some investors make some decisions that we don't understand on a Friday. Then I want to just speak about risk on and risk off. You'll see a lot of news feeds will say to you, today is risk on or today is risk off. And I'm just explaining to you here that trading is all about the mood of investors. It's either a risk on or a risk off mood. Risk on means that the US dollar declines because there is little to nothing to no fear, from investors that they need to buy the mighty US dollar and also the Japanese yen, which is considered a safe haven in case of bad news. Traders can therefore earn good profits buying the pound, the Australian dollar, the euro, and stocks on a risk on day. That means that risk is on, investors are happy, they're in a good mood. Risk off means investors are worried about something that is happening or something that could happen. So they sell stocks and other currencies and buy the US dollar. Traders can therefore earn good profits by opening a sell of the Australian dollar, the New Zealand dollar, Nasdaq futures, or buying US dollar, Canadian dollar, or US dollar ZAR. Canadian dollar, be careful because it's linked to the oil price. So if oil goes up, then the Canadian dollar will fall. The Canadian dollar will rise. And if oil plunges because of a strong US dollar, Canadian dollar will plunge with it. Personally, I'm not a seller by nature, so I mostly sit out on risk off sessions. But if I see a clear 2-minute pattern decline within the sell signals of the moving averages on the other hour charts, so in other words, I don't just look at the 2-minute chart pattern. I also check the other charts to see if those moving averages are very far apart, that the price may spike to go up. I may open a sell and minimize my risk using the 2-minute chart for a stop loss choice. So if I see the 2-minute is pulling down, it's not going up above the 200 hour, Like I've explained in previous videos, I might open a sell when it goes back up to fetch the 200-hour moving average, and then I'll put a small stop loss above that to minimize my loss should the mood in the market change, and the price starts going back up again. Okay, so let's have a look at what happened since the last time we looked at the chart. So the last time we looked at the chart, I said that it's now the big test, which is here. It was here, this candle. Okay, so I've said so far Nasdaq futures is passing the test I pointed to on the last screen of the previous day. The next test is getting above the 200-hour on the 4-hour chart. So there it is. The red line is the 200-hour moving average on the 4-hour chart on Nasdaq futures. As you can see, there are 3 candles, 1, 2, 3, of 4 hours with not much movement, indicating 10 hours of not much movement. I'm trying to say there, you see how much patience you've got to have before the Nasdaq futures investors decide to make their next move. You can go and have a good solid sleep. You need a lot of patience. You can't just close a trade or open another buy. You've got to wait to see what it's going to do next. As you can see on the 1-hour chart, the real move started at 11:30 a.m., which is GMT plus 2 time zone, until 9 p.m. So on the 4-hour chart, we're looking at when it started going up here, when it started climbing above my buy price, which is sitting here, okay, on this trading platform. And then since then, it's been bouncing for 9 hours. Okay, so this was the big move from 11:30 a.m. and now it's bouncing. It's deciding what to do, and we're watching these moving averages to see what's the likelihood. So this gray line here is the 35-hour moving average. Then we've got the 100-hour moving average, and then we've got the 50-hour moving average, and then we've got the red line, the 200-hour. Now, and this pink line is the 14-hour. So when the moving averages are aligned from lowest to highest, it's normally a good buy signal. But really anything can happen because because the 50-hour is not yet above the 100-hour, it can pull all the way down to go and fetch the 50-hour, to pull it over the 100-hour, and at the same time pull the 100-hour and the 200-hour and the 35-minute up. If it becomes all of a sudden a risk-off mood, it could pull that 14-hour all the way down back over all of these moving averages and start pulling them down. So you've got to watch economic indicators. You've got to assess the mood of the investors. Are they positive about the future? Is there something happening that might worry them? You can't only look at moving averages. It's a good indication because it tells you what they've been doing for the past 200 hours, for example. And this tells you the 35-hour moving average tells you what have they been doing for the past 35 hours. They've been buying because it's pulling it up. What have they been doing past 14 hours? They've been buying, it's pulling it up. So this is very good buy signal, but if the risk mood changes, it could plunge all the way down. My buy is here, so I can afford to let it plunge down to here. Obviously, I'm going to get a bit anxious when it reaches, and if it reaches my buy, which was last on the 19th. The price was around the 19th when I opened, remember? Okay. So, yeah, this is looking good. It is pulling the moving averages up, which is telling you what are the investors doing. Okay, if that, for example, if that 200-hour starts falling, then you know that there's quite a lot of pressure on the price. It's pushing the 200 down, which means they've started selling. So that's how moving averages help you. But you've also got to be aware of what the investors are doing and why are they doing it. Sometimes knowing why will tell you what. Knowing what the bad news is or could start happening and what could change the investor's mood can also tell you what the moving averages might start doing. So on the 15-minute chart, also on the Nasdaq futures, 15-minute chart, looking good. See how it's pulling that 200 hour on the 15-minute chart, also pulling it up. It's a bit low for my liking. It's pulled the 35-hour up nicely. It's pulled the 50-hour up nicely, but now it's struggling. It's struggling to pull the 100-hour up and the 200-hour up. So there is a chance that it's going to dip to go and fetch that 200-hour. And you must remember that if it dips, it's going to push that 200 and the 100-hour down. So it's going to have quite a lot of work to do to pull it back up again. Okay? But we'll have to wait and see. Now, today, the retail sales of the pound of the UK are going to be released. Normally hugely market moving. Retail sales is a very good indication for how well the economy is doing. So we definitely don't open a trade until those figures are being released, which is in 33 minutes time, and it is now 7:30 almost in the time zone GMT plus 2. Okay, so but we know it's in 33 minutes time for the time zone we're trading in. So I have said never open a trade before an economic data release, not ever. Price can fly up 20 points and fly down 40 points and fly back up 40 points and wipe you out in the process. I've personally experienced a positive release for a currency. So in other words, I've previously experienced a good retail sales figure, for example, which would indicate that the price must go up, and yet it plunged and 100 points. So don't think you know what the markets, what the investors, what the traders are going to do before an economic release. Don't open until afterwards, and then you wait for a trend and you use a stop loss. So while it's flying up and down, don't think you know what it's going to do. Trust me, you don't know what it's going to do. Wait for a trend, for it to pull up, 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 come down a little bit. Pull up, 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 come down a little bit. And then when you see, okay, it's pulling up, yes, it is retracing a bit to fetch the moving averages, but it's going up in general. So you wait for another downward trend, and then you buy, and you put a stop loss in case it's going to fly back down again, and that's how you trade. And always limit your risks with a stop loss and never trade with money that you cannot afford to lose. Okay, so we looked at the before the release, the 15-minute chart at 7:23 a.m. GMT plus 2. Now we've got 7:42 a.m. I'm not sure I did that, 15 minutes, and then we've got the release of the figures. Okay. So the figures have been released. So I've said it's good results, but the 100-hour is below the 200-hour moving average, and I'm talking about the 30-minute chart now. We'll have a look now. And I've seen this before, and the price has declined when it looks like this. So let me show you what it looks like. You see down here, let me try and make it a bit bigger. I hope you can still see it. There we go. The 100-hour has fallen below the 200-hour. And I don't like that. And the GBP USD is also very high. You see, if you go along back in time, just make it smaller again, it's been going up, pulling down, going up, pulling down, going up. I'm not 100% confident, especially with that 100-hour being below the 200-hour. Even though we've had good retail sales figures here, I'm not convinced that it's going to help the GBP price to go higher because of that moving average on the 30-minute chart. It's fallen below the 200-hour. So let's go along. Oh, then what I said is, once again, the US economic data releases. can override any other data releases. So if the pound has done fantastically in their retail sales now today, for example, the traders will likely, not guaranteed, but will likely wait for the US releases. Because if the US releases outperform wildly, it might push the pound down. So possibly that's why the 100-hour fell below the 200-hour here, because the pound traders are going to wait for the US economic data releases. Then I just went and showed you while I was waiting for the next thing to happen. I went and showed you what's happening on Bitcoin. Took a nasty plunge from a 60,000 high price right down to below 30,000. Wow, look at that. From 60,000, that's 2, 4, 6, 8, 10 days it took to wipe some people out. And it is now sitting at 39,466 from a 60,000 high. That's why I never buy at a high, ever. Okay, that's Bitcoin. I did tell you in the beginning of the video, I'll show you some others. So now I'm going back to the pound and I'm saying, after the retail sales, it did go up a bit. This is a 2-minute chart, so it's not really massive move, but it's come all the way down again. So you can have a look at the time here, 8:30 a.m. The pound, the retail sales were released at 8 a.m. So traders made an effort on the good news for the pound and did buy, but then sellers came in and said, no, let's wait for the US data releases. Then I just went to look at while I was waiting, looked at the old USD. I said it's looking sad on the 1-hour chart. Let's watch it because I like buying when the price is going towards the bottom. I don't buy at the top. Okay. Then I said old USD 1-day chart. So then I went to look at the 1-day chart for the old USD. Has been staying range bound for more than a week. Okay, so if this is the 1-day chart, just look how the old has been moving in quite a small range, actually right all the way back to the 21st of April. Look, a lot of money can be made in this range because it's the 1-day chart, but you've just got to be careful because it's sort of up here and then it goes down. Then it moves, this is a 1-day chart, so on this day it moves only a tiny little bit. We would have made no money either way. Then it tried to go back up again, can't quite make it. It's like 50% of the way through that day there. It went up, then a tiny little movement, the whole entire day. Then it's trying to go up, then it went all the way down again to the bottom of that one. Then it tried to go up again, and now it's going down again. So very indecisive market this. Australian dollar is being threatened a bit by China all the time. China's threatening to stop trading this with them and stop trading that with them. And by trading, I don't mean our type of trading. I mean trading with what Australia sells, their commodities, coal, that sort of thing. So it's been bobbing up and down. So maybe when you see a non-trending trade like this, you could buy at the bottom because it might be quite obvious that when it goes down, it's going to go back up again. And if you see this 200-hour, look what it's doing. It's pulling it up. It's pulling the 200-hour up, which means there's more buyers than sellers. Because if there were more sellers, it would be pushing the price down. It'd be pushing the moving average, which tells you which way the price is moving. Now, to me, this looks like the price is moving up. There's more buying than what there is selling. So maybe it's going to reach a bottom and it's going to pull whoop, all the way up. But you never know with the economic indicators, with the virus, with the China giving Australian dollar a bit of verbal threats. It could also plunge all the way back down to the 200-hour, and that would lose a lot of money if you had opened a buy here. So one's got to be aware of the moving averages as well as what's going on in the news and the economic indicators. Okay, so I did buy old USD. I put a small little stop loss in. So I bought at that rate. You can see the rate over there is 0.77430. I bought at 0.77452. Is a bit high, but I put a tight stop loss into it so that if it does go down again, I don't lose too much money. Um, because of the euro data being released, one maybe should have rather looked at buying or selling euro odd because there's euro data being released on industrial sales, and that's quite important for Australia because they sell the commodities that go into industrial sales. Um, so obviously, if Europe is going to release data that shows very good industrial sales figures, the Australian dollar will go up because it means that that Europe is going to need more of Australia's commodities because their indicators are doing well. Okay, so I've said here many traders prefer to trade the euro odd with EU data releases, which makes sense. I just personally prefer to trade the major currencies, and the euro odd is defined as a minor. And that normally means that the spreads are bigger. So, for example, if you open a price when the price is one, you'll only start making a profit when the price is 1.2, for example, which is a big lot of money to have to wait for a move to go above the price that you buy it. Obviously, 1 and 1.2 is just examples I'm sucking out of my thumb just to explain the principle. Okay, so when I opened the old USD, on the 2-minute chart, you can see now the bulls and the bears are fighting. Oh, they want to buy? Do they want to sell? To me, it actually looks like the sellers are winning because it's putting the 2-minute chart down. So currently, at this point in time, the sellers may be winning. But because it's at the bottom here, on this chart, I like buying at the bottom. I'm willing to take the risk because for all these days, if not weeks, the price has been going down and up and down and up and down and up. So let's see what happens. If I'm not right, I'm not going to lose that much money, but the charts are telling me the chances of me being right is quite good. Okay, so 5-minute chart. Now it's quite a way. It's quite a long time after the good a UK economic retail sales release. Now the price has pulled all the way back down again. 8 o'clock, it was released, which is here. Tried to go up, pulled all the way down, and I saw that on the 30-minute chart. Remember, I saw it was going to do that. Okay. Now I'm saying, remember the 14-hour moving average, the pink line. Let's just take this up a little bit. The pink line, here it is, yeah, it's coming, it's curling, okay? This is now the 1-day chart, and the pink line is curling. This is the Nasdaq. And we looked at the pink line, yeah, this is the Nasdaq. We looked at that pink line on the 18th of May, the 14-day moving average, and it has pulled it down, okay? So I've said it's now just below the 100-hour price. Okay, the 100-hour price is just above the 14-hour moving average. I've said it's a good sign for price going up because if it's pulled it down and the candle is now above, see there? The candle is now above the 14-hour. It's going to, in all likelihood, but nothing's guaranteed in trading, it's going to it's trying to pull the 14-hour moving average up with the 100-hour, which is this browny yellow line. This red line, remember, is the 200-hour. It's trying to pull the 14-hour up. The 35 is above the 100, which, if it's close, it's a very good buy signal. The risk that we have is that it's going to pull the 35-hour moving average down below the 50 moving average. So you just got to assess all the time what is happening in the market. What are your thoughts on the most likely thing it's doing. Okay, but if we have a look at this whole trend, just make it smaller again. You see the trend up, pulled back to fetch 200 hour, up, pulled back to fetch 200 hour, up. Okay, it looks like it's going to go up here. That's why I bought way down here. Down here, I bought. Okay, so let's see. I said it's always a risk. You just have to be able to interpret the economic data and currently the virus situation you have to assess, and also what the US Federal Reserve is saying about the interest rates and threats from anywhere else, be it Iran or hacking or whatever. You've got to assess the threat to the price, to the mood of the investors. Okay, and I'm sticking with what I think for now, that the mood is good, that the pandemic recovery is doing well. Okay, the 4 hour chart. So now we've looked at the 1 day chart. So now I don't just rely on one chart all the time. I'm going to look at the 4 hour chart. We're still there. We're still bouncing. Remember, I pulled it up. I said, there's the test. This is going to be the test. It's still bouncing. Okay, I've said it looks okay. It's trying to pull the 14-hour moving average, pink line, through and up. There it is. Make it a little bit bigger again. Oopsie, sorry guys. Okay, 4 hour, look at that. 50 hours below, 35 hours above, and it's trying to pull that pink one up and through. That's what it's trying to do. That's the price is trying to do. Here's our buy line on this platform. The other buy I did on another platform is just below this. It's just below this buy. And my stop loss is way down here. Okay. So we've got a good sign there for a buy price. But if the mood sours, the price falls, it's going to pull the 200-hour down. And then it might go back up again and pull down, up again, pull down. So nothing's guaranteed here. We're hoping it's going to pull up, go down, pull up, go down, pull up. Okay. So remember, a price never goes straight up. You can have a look at all this history here. Price never goes straight up, or hardly ever goes straight down. If it's going to go straight, it's going to go straight down. Look here. Boom, 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 when it flew down. When it goes up, patience, 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 patience. Okay, that's why some people prefer to be sellers, because when the price drops, it drops at a larger, at a faster pace and a more consistent pace than it does when it goes up. And that also depends on what's happening in the worldwide economies. We saw before the pandemic, the markets all over the world were just going up, 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 up. The economies are doing so well. Pandemic hit, now we're in the recovery. The investors are a bit more cautious. So the buying will take longer, much more patience is required. Okay. Okay, now we've got these data releases. This is on the 21st of May. 41 minutes time comes the big Euro PMI. It might do something to the market. There's big releases here. You see the importance is indicated by the color of these triangles. So these full darker rectangles, at least, these full darker rectangles are going to have much more impact on stocks and the euro and the pound than the ones with the smaller colors. So as these figures are being released, you watch the darker ones first. Are they green, the figures, which is positive, or are they red, which is negative? I'm not really sure if it's going to do anything today because of the big US releases this afternoon. And I don't know, I might be wrong, but I just find that when the US traders come online in the US session, the times differ. They wake up sometimes very early. Like, for example, they could wake up at their 6 a.m., which is our 2 p.m., and they can start trading or they only start trading when the market opens, which is at 3:30 in the time zone GMT +2. Okay, so I'm not convinced anything major is going to happen with these economic releases until after the US traders come on board. I've said, yeah, GBP is not doing great since their good retail sales were released. They've also got that Indian variant threatening, and Uncle Boris Johnson has been saying, oh, we might need to not open the economy as fast because the Indian variant is more aggressive, and they're a bit worried about that. That could have something to do with the fact that even though the retail sales figures were so strong, the pound is going down. So be careful. You don't always know what the market is going to do before an economic release, and then you might not even guess properly when the economic release is done. So you have to wait a bit. This is the Nasdaq 2-minute chart, 9:51 a.m. Then US is not awake yet. So this is pre-market, the Nasdaq futures. What are the investors doing before the market opens with their brokers? You can see the 2-minute chart, this 200-hour moving average is falling, which means there is a bit of pressure on the price going down. Okay, pound is going down, US futures, bit of pressure pushing it down. We'll need to wait and see. Then I'm saying this doesn't look promising for my buy because the 100-hour is just below the 200-hour. Let's have a look at the chart. It's fallen onto the next page. Okay, look at this. So now, what this says, so this is the 30-minute chart. I like the 30-minute chart. The moving averages are a good indication of what the market is trying to do. This is Nasdaq futures. This is 10 a.m. GMT. The New York, in New York, they're 6 hours behind. Okay, so they're still sleeping. Now, it's pulled this 100 moving hour average up. But because that 200 hour is above the 100 hour, when that 100 hour touches that 200 hour, if there isn't a sharp price increase to pull the 100 hour with the 200 hour up, the price is going to drop. Okay, so when this 100 hour was far away from the 200 hour, which is above it, the price pulled up nicely. Then it pulled the 100 hour all the way up. Now it's saying, okay, what do I want to do now? Because now the 100 hour is very close to the 200 hour. Am I going to pull it up and through, or am I going to plunge to fetch it? All depends on the investor's mood, but that is how the moving averages help you to see what could happen to the mood. Are the investors saying, no, we want to pull the price right up? This 100, 200 hour is too low. We must go and fetch it. Now, the analysts think I'm mad to think like this, but you know what? It happens. It happens over and over and over again, and I wouldn't be surprised if it doesn't happen again today, especially on a Friday. The price might fall. Remember, we've got buyers down here, so it's okay if it falls to there, because my belief is it's going to pull it back up again. On a Friday, when investors are not sure what's going to happen on the weekend, it could very well go down to pull it back up again. And the analysts, like I say, they think that I'm crazy to think that that happens, that that's what investors do. But I really do believe that investors use moving averages to decide what to do. They might think, okay, let's go and fetch these moving averages faster. Instead of trying to pull them up little bit, little bit, little bit, let's just sell whatever stocks that they think might be at risk over the weekend, and then wait here Saturday, Sunday. Monday they wake up, they decide, oh, something bad did happen. Let's pull all the way down. Oh no, our mood is good, the things are looking good, and they'll pull them all the way up. And then there's more momentum for the price to go higher. Hope I'm making sense for you. Okay. So I've said, because everything's bobbing up and down and the pound's even falling, we might have to wait for the The European has been released. It's mixed. The most important ones have fallen, so the euro is probably going to fall. Okay? Still got more euro economic indicators to be released, important ones, and we've got important pound indicators still to be released. Also, maybe what the pound's waiting for instead of just having used the data releases on retail sales. Okay, so now the euro PMIs, like I said at the above here, the red ones. Forex Live confirms that the PMIs are less than was expected, which should indicate that the euro is going to fall. I said nothing happened, not much movement at all. Price of everything likely only moves with USA economic releases later in the day. And I just explained about the darker rectangles. And I made a little joke here saying perhaps the European session traders are just sleeping late today. It's a little joke, but maybe sometimes there's truth in jokes. Okay. Now I've gone back to look at the Nasdaq futures at 10 a.m. my time, GMT plus 2, the 5-minute chart. Sure. You see how it's pulled? Even though the price is bobbing up and down, there must be more buyers because it's pulled the 200-hour moving average up tremendously. Okay. So there are more buyers than sellers here. And if your platform tells you that there's more sellers than buyers, it's not possible because you can see on the moving average. It's pulling up. Okay. But I did say the 30-hour chart that I showed a little while ago, those 200-hour is a bit low for me. So it might pull the 5-hour up, get that out of the way, and whack all the way down to go and fetch the 30-hour. It's already pulled the 5-minute. It doesn't have to worry about that too much. It pulled the 30-hour. The 5-minute will then come back down to, yeah, perhaps, but it's going to be higher than where it started, yeah. Okay. But I'm not sure. I'm just going with my gut, my experience, and probably a little bit of luck. 15-minute chart currently at this time of day was not very comforting for me either. It will require perhaps a sharp price increase in the US session to pull everything up. Sorry guys, I'm bobbing about here. Yeah, I also said it's a bit weird. Are they still asleep? Or are they waiting for the US traders? Yeah, the price fell for 2 hours. Where's that other chart that I was on? Yeah, I wanted to just see what I wrote here. The price is going to need to pull more up than down until US market open in 8 hours time. Okay. It'll likely pull the 100 hours. It's this one again. The 15 minutes, which I'm saying it's a bit low. These moving averages are a bit low. Either when the US market opens, it's going to have to pull up sharply to try and pull these moving averages up higher, or, like I said, because it's Friday, it might go down and then wait here for Monday. Okay. But I do believe it's going to keep climbing. We saw that on the 5-minute chart. We saw that how it's going up. Okay. 15-minute chart, even if it falls to here to wait for Monday, me personally believes it's going to go back up again. But I'm a trader. I've limited my risk in case it doesn't work like that. So this was just released. The most important one was a miss on the economic data. They expected 62, it was 61.8. Shouldn't make a huge difference, but yeah, there was a sharp buy and a sharp sell and a sharp buy and a sharp sell for 2 minutes, and then it decided it's going to do nothing. Just stayed there after that release. Okay. And I said the price has been falling for 2 hours now. That's on the Nasdaq. Remember the 30-minute chart I warned about? So if you count these little candles, which are 30 minutes each, you'll see it's 2 hours it's been falling. Okay, back on the Nasdaq 1 hour chart. You see from the last chart we looked at, it's pulled the 50-hour, the blue line, up above the 100-hour. That's what we wanted. So the price is definitely going more up than what it is going down. Or both of these moving averages, the 35-hour and the 50-hour, would have been pulled down, not pulled up. Okay. But the risk again is that it pulls that 14-hour, the pink line, that it pulls it back down over all of them. And there sits our buy price. It's always a risk. Just because it looks beautiful, if the market mood changes, it can look as beautiful as it wants. It's not going to help itself. Okay. 5 minute chart, it's going down again. It's opened up that gap a bit, probably to fetch the 15-minute 100 and 200 hours, like I suspect. Okay, at least we're on a bit of a profit for the old USD, but I'm not counting on that hugely. That's where we opened the buy. It was on my other platform, so the line won't show you. So it is climbing, but I'm not relying too much on that trade. That would have just been quick, easy money. Probably close on a profit over there. If it starts falling before then, I'll close before it hits my buy price and make it small profit. Okay. 2 minute chart, just to help you read charts, it's trying to pull the moving averages through. Whether it's going to succeed or not, we don't know yet. My bet is that if the price gets above and stays above the 5 minute chart, so this is the 2 minute chart. Let's go and have a look at the 5 minute. If it gets and stays above the 200-hour on the 5 minute chart, there we go. So it happened. There's a 5 minute chart on the Australian dollar, almost 12 p.m. GMT plus 2, 21st of May. It's gone above the 200-hour on the 5 minute chart. It's pulled the 14-hour through. The 50 and the 35 is still below the 100. So it's going to have to be a sharp price increase to pull them above. Let's see. Maybe it's not going to work in the European session. Not enough buyers. We may have to wait for the US session. But you know what? Sometimes in the European session, there is big movement, especially in currencies. Traders of currencies mostly trade in the European session. There is big money in the US session. A lot of the Europeans finish trading just after the US session opens. They can't work 24 hours a day. So a lot of currency movement does and can happen in the European session, and then the US session is a lot more volatile. There's a heck of a lot more buyers and sellers that fight with each other, taking the price up and down. Okay, so this is now 1:43 p.m. So this was 12 p.m. where I said the price got above the 200-hour. And I said if it stays above it, we've got a good chance that it carries on. So let's look at 12 p.m. Is it an hour later? So it's 12 p.m. and this is 1:43. It's almost 2 hours later. Okay, so you see it was here. When we last looked, it was almost 12 p.m. Now it's 1:43 p.m. So 12 p.m. this is when we last looked. So the price has climbed even more. But now it started going down. So it hasn't pulled the 50-hour through yet. My guess is it's not going to make it in the European session. It's not going to pull up again. Might close here and just take the profit. Pull down here. Okay. GBP USD is struggling even after those good figures. But there's the 30 minutes again. The 100 hours fallen even lower below the 200 hour. So it might whack all the way down here. And then it will wipe out all the European traders' work for the day. So European traders started here. Price went up to there. It's come back down to here. It will probably wipe out the European traders' profit in the hours to come. Hopefully they closed at the top. Okay. Or USD, are we looking at 2 o'clock? Just as well we closed at the top there because the price has fallen. GBP fell, Euro fell, Australian dollar fell, Nasdaq fell, Nasdaq futures. My favorite personal chart on the ORD, yep, falling back to the 200 hour. Moving average on the 2-minute chart. It's always got to get the 200 hour. Whether it's selling, you can see when it was selling here, it went back, fetched the 200 hour, sold. Went back, and then it said, oh, okay, something good's happening, let's buy some more. Now it's got to fall back again to the 200 hour. My gut is telling me until the US economic indicators are released, it's going to fall further past there. So I closed my buy at the top. I didn't open a sell because I'm not 100% sure it's not going to go back up again after it's hit the 200 hour. Maybe we'll look when it does hit the 200 hour. What's happening in the market? What's the mood? What are the indicators saying? Might buy again. Okay, moving averages on the 5-minute chart. So it's at the same time, it was 5 minutes apart. Yeah, we looked at the 2-minute chart. Okay, now quickly looked almost immediately at the 5-minute chart. This is not a good buy chart. Even though it's pulled the 35 hour and the 50 hour above, the 100 hour is below the 200 hour. If it had have done well enough, it would have pulled the 100 hour above the 200 hour also, so that we could have it chronologically, for want of a better word, 14, 35, 50, 100, 200. That would have been a clearer buy signal. Not a guarantee, just a clearer buy signal. But it didn't manage to pull the 100 hour above the 200 hour. I'm saying it's going to go down below that before the US economic indicators. Okay. So the pound wiped out all the Europeans' work by 2:17 p.m. GMT USD, which is as the US traders start waking up. So they wiped out all the profits made in the European session on the GBP. They are trying to wipe out the order as well, and like I said earlier, I think they'll succeed. And then I said if the Nasdaq futures keep climbing, there's a better than good chance that the order will break out above, but it's not guaranteed. So decide your stop loss. How much money are you prepared to lose to take the chance? Okay. Your order is a 1 hour chart. It's trying to pull the 14-hour pink line through, but that 5-minute chart suggested to me it wasn't going to succeed. See, it's trying to pull that 14-hour chart up. Personally, the 5-minute chart with the 200 hour above the 100 hour didn't look good. Okay. Sorry, I keep saying okay. The habit. I almost said okay again. Okay. Oh, there I did say it again. I'm mumbling as well. Okay. Nasdaq futures 15-minute chart again at 2 p.m. Struggling, eh? Struggling to pull this up. Sure. Either the price is going to have to fly up to pull this 200 hour up, or it's first going to go and fetch it. Maybe wait there Saturday and Sunday. When Monday starts, they can decide do they want to take it up further, which is what I'm hoping for, or are they going to sell further? Okay. Oh. Here's a little pop-up that came through now, 2 p.m. Tesla CEO Musk tweets that there will be a Model S paid delivery event on 3rd June. It could be positive for the Nasdaq if investors like the fact that he's going to deliver this vehicle on the 3rd of June. May be a positive clue for the USA trading session because Tesla is listed on the Nasdaq. So I'm just watching the pop-ups, watching the news. Australian dollar 1 hour chart again, just watching again. It's trying, but it's just still within that level, those levels that it's been in for the past week and longer. It's not a very great looking trade. Okay, so ECB's Christine Lagarde has said, given uncertainty, accommodative policies remain necessary for months to come. So that means she's going to keep the interest rate low. So the euro is going to fall. And there you saw it started falling. I said earlier as well that I thought it would start falling because those rectangles that were so dark came back negative, the economic data releases. And now Ms. Lagarde has said that, so the euro will likely continue falling for a while. Here's the big US session market releases that's coming up. And I'm now going to leave you in anticipation at this stage when we will have a look at what happened. See you in the next video.